Good day, y'all. Ira Epstein with your agriculture update, and I am late. It's getting on to 6 p.m. Central Standard Time, and this is Wednesday, the 20th of February, 2019. Now, these are quotes for already Thursday's trade, and if you'll notice, the grains have nothing. They've just got the previous settlement prices in them, and that's because of how late. They'll open at 7 p.m. If you take a look, we're in something of a correction mode right now in the weekly beans. We're down only 5 cents for the week, so I'm not saying it's a big break, but from the high close of 9.25 and a quarter, we're down about 20 cents. When you look at the daily chart, you see how this market has come breaking down, and you can see that it's had a pattern of lower highs and lower lows. That is bearish. To neutralize that, you've got to get back over the 925 area to at least give the market a pattern of a lower low and a higher high, which you don't have yet. The resistance in the market is 928.5, and that's going to fall when we reopen tonight. It's falling at a rate of about a penny a day, as you can see. So I doubt that it's going to be lower than the 925 area. And if you take a look at this green 100-day moving average of closes, that is where the market is fighting one of the battles for support. Right through there, and I think you can easily see that that's what's going on. The other number in the market is the lower Bollinger Band, which happens to tie right in with that, as you can see. In the market, while it got under these numbers, came back today and closed above both. That's not a bullish sign. It's just a sign the market has hit downside targets and the market is trying to stabilize a bit. In the slow stochastic momentum, you are oversold. You have a market that's bearish, hit its downside targets, been hitting them for 3 days in a row, and not able on a closing basis to mount much of anything. And as you can see in the meal market, the market went down, challenged 2 days in a row. Now the lower Bollinger Band came up, and it too is oversold. Now meal and soybeans are also looking at, are we going to get a Chinese trade deal? Are they going to buy more soybeans? What's going to happen? What do world crops look like? Blah, blah, blah. It goes on and on. We know that the Chinese delegates have said over and over they want to buy more American goods to narrow the trade deficit. It's still the intellectual property. And in tonight's update, as I write it, I tell you where I think China and the U.S. has agreed only when dealing with the intellectual property. And I think there's 3 outstanding issues, and I list them tonight there. When you're in the soybean oil, notice how the market made a run for that lower Bollinger Band, got to 29.94. That number's 29.89, managed to close higher. I think the pros were taking some money off the table. In fact, the whole bean complex just looks temporarily like a market that wants to stall a bit. In the corn market, the one thing President Trump said today, China's going to buy a lot of corn, more than you can imagine. Okay, so with his statement, he put up corn 1.50 pennies, not very much higher, right? You are oversold. You've hit the lower band. The market is what? It's hit its downside targets. It's been pushing out these lower bands. There's layers of resistance higher at 385 up to the 386.5 area. Take out 387.25, you negate this bearishness. What bothers, I think, short sellers is the market is oversold and not trying to embed. Wheat's in a total state of collapse. And I pointed this out when I said you had all this perfect sideways action. The market then came down. The question was, would it bounce away from this, or was it going to feed on itself? It started putting itself 2 days in a row under the lower Bollinger Band in an oversold condition. But as I had mentioned, and I'll say it again, in order to get out of sideways action, markets typically get overbought or oversold. This is a very different looking chart than the corn chart was. It's not as narrow here as it got in price here. And as you can see, the market is still what? Breaking itself down as it gets through here. Is it getting overdone? To a degree, probably. How low? Well, you have to watch the market to find out. But let's assume you wanted to sell it here. Where would you put a stop is what you got to ask yourself as well. In the sugar market, you're at the top of a trading band. Are you going to push it out or not? That's what the difficult question is. You're overbought with no chance of embedding at this point. That's very different than where both numbers in the wheat are trying to get themselves and stay under the 20 level. You're not even close to it in sugar. So I'm not saying it can't go higher. I am saying it is not trending. This is a reaction from staying under that 18-day average. It's in an area where it's vulnerable. In the coffee market, you're still very much in the bear camp with an embedded reading, lower highs, lower lows. This is called running the lower Bollinger Band. Instead of watching price so much, I turn my attention to momentum. And if you look at the momentum, both numbers are under 20, under 20, under 20. Day before as well. It's the fourth day of it. When you lose that, where the red line gets back over the 20 level, I will then probably say to you, depending on where the market closes that day, that I would guess that price and the 18-day average want to make a run. When you say, what do I mean where it closes in the day? If you get my subscriber videos in the morning, I teach all that. And you go to our website under the word research or education morning subscriber video, because I talk about that all the time. In the cocoa, this is more what the sugar looks like to a degree. No attempt at trying to embed. The market did get itself into overbought territory, spent 2 days over the upper Bollinger Band, but no chance of embedding. I look at that type of market and I often say, probably it's going to try to get back under that Bollinger Band, which it did here. Support, pretty solid at the 18 and the 100-day average, but if you take out this 2246 level, you break this whole pattern. So we'll see what the markets do. I don't know with an overbought market like that if the pros are going to step in and support it. In the cotton, this is a market that is flirting with losing its embedded reading. Formally tonight, it lost it. You see this reading at 2032? Because that is after going sideways for several days under a 20 reading on both these numbers. Do you see that? That's the first sign where I think the pros at the very end of the day probably lifted out of the market. Now the market's got to prove itself. And if you look at the settlement price, it was near the low part of the day, which means if it opens lower tonight, it could easily re-embed. Had the market closed in the top part of the day, I probably wouldn't be saying that. But looking at it, you have a weakened market. It proved itself right here when it started making the higher highs, higher lows, but the dominating factor was, past tense, the embedded reading. The only day you can get an embedded reading back after losing it is the very next day. If this market were to take out 72, 77, the odds are it wouldn't be able to re-embed. In the cattle, you have a cattle on feed report. The market's up into an area over the top Bollinger Band, and it too is a bit overbought. Feeder cattle, they're just hugging this 18-day average 4 days in a row, as you can see. And in the hog market, you're staying in big trouble. Why? African swine flu supposedly has gone into Vietnam. There was word that it was going into Canada. Canada has denied that has happened. And there's one other country that it went into today. I forgot the exact name of it, and I don't want to misspeak. It's a very serious problem because you have to cull the herds. I think in China they've probably culled 1 million hogs. They're very close to it already. And you can see when this happens, you come down. But that's also bearish the grain market because these animals eat feed. So keep that in the back of your mind. You know, one of my tools that I use during the day is I'm looking for resistance support points, or maybe I have put out trade recommendations and I say get out of the market here, or I have a stop there. It gives me an edge. Are my stops going to be hit? It gives me an edge. What is the likelihood in terms of momentum that this market's going to go to my price objective? So what I use is this, and if you look, you got lines above, lines below the white line, which is your center line. These are resistance points, support points. It's a formula that has been used by a number of traders. I certainly didn't come up with it, but what I did come up with is adding my slow stochastic study to it, and the way that I teach working with pivot points. I think it gives you an idea what are the odds of the market moving to upper bands or lower bands. How does it all work? Well, I put 2 videos to teach you about it. All you do is call my staff. They'll get them out to you. It's a link. They'll play right away. You can go to our website, sign up for it there if you'd like, and you can click up here to get there as well. I'm Ira Epstein. You have a good day.